Give a person a fish, they eat for the day. Teach someone to fish, then they're freaking rich. At least when it comes to today's subject. Complete this sentence for me. GameStop, AMC, and who's next? Welcome back to the channel. I'm Skylar James, and today we'll walk through how to complete that sentence and identify the next big short squeeze before it happens. And as a bonus, I'll share with you what stock I think will be the next short squeeze. This analysis is really a task of looking for factors that could lead to a squeeze. Don't think of it as factors that will lead to one. These factors and conditions like clouds in the sky, they don't come with the promise of rain, but it's more likely to rain when the clouds are overhead. The first factor for spotting a short squeeze candidate is there's a high short interest, which is just a fancy term for how many shares of the float are shorted. Short interest is probably the most commonly discussed metric for IDing short squeeze targets. I find that a stock with a short interest over 20% is pretty noteworthy in the grand scheme of things. Now, before the big GME squeeze, for instance, the short interest on that stock was over 100%. Props to the Reddit traders for identifying this as a short squeeze waiting to happen. Why it was over 100%? Well, that shouldn't technically happen, but we won't cover that aspect in this video. After the two GameStop price run-ups, you can see that the short interest has retreated to a much more reasonable 21%. Still, the short interest indicator held true and signaled that the squeeze was imminent. Even outside of squeezes, I always look at the short interest of a stock before buying it. You should too. Think of it as a dummy check. How many billions of dollars are hedge funds laying on the line, betting that stock ABC is priced too high? If something I want to add to my portfolio has a high short interest, maybe I crunched the numbers wrong, or maybe I'm wrong about this company's narrative. I should go back and re-examine why I'm bullish about this business in the first place, because other smart people are clearly bearish. Anything with short interest over, say, 8%, I'm gonna double check myself before pulling the trigger. But look at these power players: Shopify, Nvidia, Google, Amazon. 4 big time growth stocks, all with minimal short interest, accompanied by strong year-to-date performances. Just real-world examples of how stocks with low short interest are often the ones increasing in value. The second short squeeze factor to know about is the days to cover, or put another way, how many days would it take short sellers to minimize their losses if the stock price goes up? Remember, they lose when the price goes up. They hope it drops. That's how they profit. And the further it rises, the further in the hole they are. Days to cover is a straightforward calculation, just like short interest. You can just look it up too. There's no math required on your part. But days to cover offers a window into the future where we can see if the upcoming short squeeze will be tame or extreme once it actually starts happening. The formula for the days to cover is the number of shares currently shorted over the ADV. But what does that matter? Here's a hypothetical Goldilocks scenario. The price of a heavily shorted stock, XYZ, rises on its own because of good news or good earnings or something similar. When that happens, people with short positions will be putting in buy orders to cover their losses. It's pretty remarkable that the people betting against the stock now become the buyers. And because we obviously need a buyer and a seller for any transaction to go through, these shorts might find that the stock isn't liquid enough to meet their demand in just one day. They might need 3, 4, even 10 days to cover. So I think of days to cover as the shorts will become buyers each day for that many days. The natural rise in the share price from the good news or earnings will be amplified by shorts, the bears, also coming in and buying during that time. It becomes a feedback loop, pumping up profits to people like me and you because we caught this early. For our purposes, the more days it takes to cover, the better. Short squeeze factor number 3, give me a stock with a lot of haters. I mean something more than just how many shares are shorted. I want a play that has people going onto social media or TV and drawing a line in the sand and saying, This stock is worthless. I want loud, firm opinions. Like Citron, research in the days before the GameStop squeeze, loudly shouting down the Redditors. I want long, detailed reports that leave egg on the face of companies, and I want rants from big financial bigwigs that rope the rest of us into the story. The squeeze is on at that point. Passion leads to outperformance. I want a short squeeze candidate that people passionately hate. And here's the fourth factor. Loud noise that draws in investor and trader types like us, that's a good thing. Loud noise that draws in people who don't normally invest or trade, that's a bad thing. So my fourth factor is this can't be a stock making headlines on mainstream media. I'm not talking about headlines on CNBC or Bloomberg. I'm talking about when your local news has it as a top story, like GME was in January, because at that point, the easy money has already been made. Anybody thinking of just now entering this trade is taking on a lot of risk. And I've got numbers to back this up. Let's go back to January. Everybody and their mother was discussing GameStop. My neighbors, my friends, my mail lady, and yes, my mother. Because by that point, GME was all over the news. But my response to every single one of them was the same. I asked, what are the chances that you're getting into this trade on the way up instead of on the way down? Because retail traders and investors regularly get crushed by showing up to the party when the punch bowl is already empty. This insight from Google Trends is really interesting. This is around the time GameStop was blowing up my TV. My mother and my mail lady, they weren't talking about GME on January 21st, when Andrew left and Citron seemed to be at war with Reddit over GameStop's valuation. They weren't talking about GME the next day either, when the stock jumped 50%. They did start talking about it later on January 26th and 27th, after Elon Musk tweeted out, "Game stonk," and after the share price had climbed to $200 and $300. Numbers don't lie. Anybody who entered that trade on January 26th or later needed to sell very, very fast or hodl in order to avoid massive near-term losses. I was actually wondering, do we still say hodl if it's not crypto? Anyway, probably a lot of inexperienced, downright noob traders got burned doing that. They violated factor number 4. They entered too late. So what I'm saying is, don't enter the trade if the mainstream media is already pumping it. You've already missed it. This fourth factor is probably the most important. When you hear the YouTubers yelling the same mantra, it's probably too late. Do your own research before jumping in as everyone else has jumped on the bandwagon. Take those 4 factors and create yourself a list of stocks worth watching. Look for high short interest with multiple days to cover and passionate haters, and isn't something you heard about through your mail lady. Pull the trigger and buy when you see one of these plays moving upward with no new news at all. That could be the sign that the squeeze is beginning. So there's your 4 factors. You now know how to ID short squeezes with the best of them. A few minutes ago, I promised you which stock I'm pegging as the next short squeeze. You are the first person I'm telling this to. I think Virgin Galactic is going to see an epic short squeeze in the coming weeks or months. Here's why. They have a whopping $0 in annual revenue, growing 0% year over year. They have had 0 satisfied customers so far, paired with multiple test flight mishaps. Oh, and if you read the short report by Carisdale Capital last month, maybe you also know that their spaceships were designed in 2001 and that it can't actually reach the scientific definition of space, and that the technology is so old and rigid that the plane can't be modified to even reach space. Sounds like a great stock to short, or in our case, to squeeze. I've been following this company for a little over a year now. You might have seen my ARC-X analysis, so you know I love researching space economy plays. My gut says SPCE has a lot of the haters. Check. Bonus, it also has a lot of believers. Little bit of a Tesla-like setup. A short interest at 27%. Check number 2. Days for short sellers to cover, about 3.9 as of this recording. And it also checks off number 4 because a Virgin Galactic short squeeze isn't a mainstream idea yet. Go read about the company on a non-financial website. The majority of articles I come across on non-financial websites are positive articles, ones that discuss space exploration and ultra-fast air travel, and usually pointing to Virgin Galactic, SpaceX, and Blue Origin as examples of the progress humankind is making. Lumping Virgin Galactic in with SpaceX? I'm loving what the mainstream thinks of this company's story in comparison to the dark reality of its business fundamentals. Virgin Galactic checks all the boxes and is already moving several points a day on no noise at all. I'm ready to go. Are you? What's your short squeeze play? Let me know in the comments below and I'll catch you on the next one. So here's a quick addendum to the filming. I finished my research on Thursday, and as of Friday, it looks like Virgin Galactic is already pumping. I don't know if you've seen the stock, but it went parabolic first thing Friday morning. So maybe I nailed this one, but you guys unfortunately are not going to see it until probably early next week, which it might already be a done story. Anyway, yeah, we'll see how this one turns out. Ooh, buddy, I hope this short squeeze works out. Also, I decided to put all this information that's up here into a Google Doc. Once it's complete, it'll be a step-by-step guide that you can use for free. It'll be linked down below. All right, thanks. Bye, guys.